Has COVID-19 and the economic recession slowed down the housing market? Well, I was just having a conversation with a builder friend of mine, and he told me that he was working until midnight trying to get bids out. He was booked out through the middle of next year, and he had projects that he thought he was going to land that would keep him busy for the next 2 years. He told me this is the busiest he has ever seen the residential construction market in the history of time since he's been in the market. Likewise, I think if you ask anybody involved in the mortgage, construction, or real estate business, they'll tell you a very similar thing. Their hair is on fire. This is one of the most incredible markets they've ever seen. The demand for housing is intense. The supply of homes is low, and there is a lot of investment, be it new construction as well as renovation going on. So the question you might ask is, why is that? How is that right in the midst of this COVID-19 crisis and in the middle of an economic recession, how is it that the housing market can be so hot? Well, taking a look at these mortgage rates by decades, going all the way back to the 1970s, you can see that interest rates have ranged as high as 12.7% to today under 3%. But what's really interesting is the estimated monthly payments. You can see that in the 80s, it was a very expensive time to own a home. Your payment, because of those high interest rates, would have been about $3,248 for a $300,000 home. Compare that to today at $1,258. That's $2,000 less in monthly payment. So we ask ourselves, why is the housing market so hot? Why is there more demand for housing than there is supply for housing? Because right now, with interest rates as low as they are, it makes sense to be a home buyer because those payments are so low. Remember, there's 3 things that affect homeowner affordability. Number 1 is the price of the home. Of course, everybody thinks about that. Number 2 is the interest rate you pay on the mortgage. And number 3 is the income level. So if you look at housing prices over the last 10 years, of course they have gone higher. But countering that, interest rates have gone lower, and people are making more money today in terms of hourly basis than they were in 2010. So because there's more income and lower interest rates, you actually have housing more affordable now than through most time periods in the past. Hey, any additional questions? We're here. We'd love to hear from you and look forward to serving you on your next home purchase.